Hello, everybody. Welcome to the technical analysis webinar with AvaTrade. My name is Troy. I'm a senior account manager. I'll be leading the session this evening. Before we get going, let's do a quick systems check just to make sure everything's up and running fine. If you would, type OK in the chat box if you're hearing me clearly and seeing the screen all right. All right, great. I've got enough responses. I can see we're up and running fine. Thank you very much. Hello, Grant, and everybody else. I'm doing great. Thank you. Okay, so technically speaking, there are a lot of nice movements today. The fundamentals have been a bit gloomy, but there's been kind of some bouncing in both directions. So the movements have been nice for technical traders. We'll take a look at what's been happening. And we'll take a look at the fundamentals behind the movements first, and then we'll get on the charts and look at some of the live movements on my demo and see some opportunities maybe that you might be interested in going after still today. So as we get going, keep in mind, all investments have risk. As always, we need to understand that no one trade is guaranteed to bring you profits, and it makes sense to have some sort of risk management plan in mind as you go into each of your trades, whether you're using a stop loss to manage the amount of risk you're looking to have on each individual trade, or maybe you're using hedge positions to cover risk in case things reverse with pending sell stops or buy stops that would activate if things go bad on your initial move. Also, with the web trader platform and the AvaTrade Go mobile app that AvaTrade offers, there's a nice tool called AvaProtect that can protect against losses for defined time periods. And this is available on gold, silver, and all FX pairings. So it's something that I think can be very helpful for part of your strategies and your risk management plan. It's something that you can consider using, and we'll take a quick look at how that works. Now, as we go forward, keep in mind what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, technical analysis in general, what is it? It's looking at the historical movements on the charts and looking for repetitive patterns, for trends that maybe are predictable. Many times what happened in the past in terms of price levels and reversals and breakthroughs can give you an indication of what could happen in the future. And while certainly historical movements are no guarantee of future movements, they certainly can be helpful in improving upon entry points, exit points in different strategies. And so it's certainly worth your time to understand the technical analysis of the chart, to learn manual methods of technical analysis like drawing your own support and resistance levels, trend lines, etc., and also making use of different indicators that can help you out as well. So as we go along, keep in mind, you can ask questions at any time. You can give input at any time. You certainly don't have to wait to the end of the webinar to ask questions, as this slide might suggest. Feel free to contribute to the conversation at any time as we go through. And so welcome those of you that are new to AvaTrade. I know some of you maybe even don't even have a live account yet. We'll go over some features on the web trader platform, AvaTrade Go, that most of them you can try out on your demo accounts, but keep in mind to take advantage of some of the premium features, you really need to at least get a live account with some kind of balance in it, so you can get a feel for everything that we have to offer. Those of you that have been with us for a while, obviously you have some strategies you've been trading with, but we can still obviously look at some new ideas, and I think there'll be some things that are helpful for you as we go along. So in terms of our platforms, we can look at AvaTrade Go, which is under the Platforms tab. AvaTrade Go is our custom-made mobile app. Lots of nice features that you don't find anyplace else, like AvaProtect. You can, for defined time periods, protect against all losses for a small premium cost. And any losses that could occur or might occur during that protected time period are added back from the protection. And if you profit, all the profit is yours. There's just a small premium cost when you open the trade for that feature. If you program take profit mark, stop loss mark, it calculates your exposure, your potential profit for you to those price levels. And also it calculates margin requirement as you enter your trade size or change the trade size. So it works as a trade calculator as much as a trading tool. So not only does it open and close trades, but it calculates a lot of the risk management stuff for you. Sandu, you missed the last webinar. Yeah, we did go over some trading the gap strategies. And yes, since we're doing a technical analysis webinar, I actually plan to take a look at oil again. And we'll take a look at that trade the gap strategy there, and also Tesla, which is interesting right now to look at. So we'll take a look at a couple nice gaps that exist on the charts. And for those of you, again, that are new to things, you might not even know what a gap is, but you will shortly. So we'll go over some nice strategies around trading into or out of gaps on charts. So what about the web trader platform? It'd be nice to have it, what's available here on the phone with these nice tools, also available on your PC, and it is. Just click log in, and then you enter the web trader platform. The AvaTrade Go app, the web trader platform, trade right over top the MT4 and MT5 accounts. Okay, it's the same account. You open a trade here, you'll see it on your MT4 platform. If you log in through the MT4 mobile app or the AvaTrade Go mobile app or the MT4 platform off of your PC, the same for the MT5, you'll see the same trades in all the places. You can manage them in multiple locations. What's nice about this platform, which you can expand the chart, it's just like similar to MetaTrader 4, you can go full screen with the chart, you can minimize it. You have favorites list over here. There's lots of nice features that are built into this that maybe you don't have on the MT4 platform. Now, if we were going to search for something, let's say we want to look at what's happening with gold. So I choose gold here. It opens the gold chart. It adds gold to the list here. And so what if I want to buy on gold? We talked about Ava Protect. And so if I want to choose Ava Protect, okay, maybe I want to do five ounces, okay? Tells me my lot size and the number of ounces for gold right here. Here's how much margin it will take to open that trade. I look at my balance, I say, oh, I have plenty. I can open a trade even a lot bigger than that. Here's my margin impact. And if your account was in euros or pounds or Canadian dollars or whatever, it will calculate it in your account currency, what the margin requirement is. Ava Protect, if I want to choose that, okay, how long do I want protection? 1 hour. If I'm a scalper, maybe I choose 1 hour. It only costs me $12 and change. You know, with 5 ounces, if gold jumps $4 or $5, I make a lot more than what the premium cost is, right? Maybe I do 2 hours protection, 3 hours, 6 hours, 1 day, 2 days. Okay, so you could do long-term trading. Only $49 for protection on 5 ounces. The way gold moves, not only could it move enough to cover that cost in 1 day, but we've got 2 days coverage here. I've seen gold move enough in 1 hour to cover that kind of cost. So it's a nice tool, especially if you expect volatility, to put protection on your trades. Now, what about if I'm using a stop loss? Okay, I put my price. Maybe I say, okay, I'm buying. I'm going to enter at, you know, the price now, maybe 1887 or so. And I say, okay, I'll put my stop loss at 1867, $10 down. Well, what am I risking? $102. Tells me right here, it calculated it for me. Maybe I say, well, yeah, that's about 5% of my balance. Maybe I say that's too much. I don't want to risk that much. So maybe I still want that stop loss price, but I don't want to risk that much. So let me lower my trade size. 4 ounces, 3 ounces. Now look what I'm risking, $61. Okay, so as soon as I toggle the trade size, it adjusts what I'm risking. Same for the take profit. It'll tell me how much I would make. Okay, maybe I'm wanting to take profit if it hits 2,000. There we go. Here's how much I'd make, 449 and change. And it's moving because the price is moving. My entry price is moving right now. Kwasi, good question. Can you save templates for the way you have your charts set up, all of that on the mobile app for MT4? No, it doesn't have the same functionality for saving profiles and templates and adding custom indicators. Mobile apps in general tend not to do that, whether it's the MT4 mobile app, AvaTrade Go mobile app. But the MT4 platform itself, that's one reason why you might use both our web trader platform, but also the MT4 platform downloaded or the MT5 platform, because you can add customizations to that downloaded platform, okay, because it's not web-based. Good question. Okay, so nice features in the order window, okay, for risk management and calculating things before you buy or sell, so you know exactly what's going on. What else is nice to know on this platform? You have on live accounts, demo accounts won't have all these features available. On live accounts, you'll see Trading Central. Economic calendar, it's the same as you'll find lots of places. It's nothing special about the economic calendar, but it is nice. There it is. I can click on it. You can find it on Forex Factory, Economic Calendar, or investing.com. It tells you all the upcoming announcements, what kind of impact it's expected to have, what currency it's expected to affect, etc. But really what I like in these features, if we look at the Trading Central features, analyst views, look at this, it's like signals. You've got currencies, pairings, different assets explained, what the preference is for potential moves, where the price levels are, support and resistance. It looks like it's expected to break out in a drop right here. Makes sense. There's fear on the markets, right? The fundamentals say probably the Swiss franc as a safe haven currency would strengthen. Now you look and you see a signal here saying the same thing. It's expected to break the support and drop, okay? Free signals. That's basically what this is through Trading Central. This is a premium service. Usually Trading Central costs money. On all of our live accounts, we think it's important to provide these services to our clients for free. We can also look at fundamental news through that feature, through Trading Central. It brings up this pictogram. Looks like Pfizer is trending the most. You see that? It's the biggest bubble in the pictogram. Tesla is trending large. Look how many stories out about it. I can click on Tesla. Here's my fundamental news. Okay, stories about that affect Tesla are right there. You can expand the story and read the whole thing. It takes you to the website where it is. Okay, so very nice features that can really help with your fundamental news. So a lot that the web trader platform offers, and also the AvaTrade Go mobile app has a lot of this functionality as well. Someone's asking a question, is why I got quiet. I'm just reading. If your equity goes to 0, will the position close or will it still continue in minus value? No, you would get stopped out. There's a stop out percentage level depending where you live. Some areas it's 10% margin level percentage, other areas it's 50% margin level percentage based on your local regulatory rules. Your trade would get automatically closed before your balance would go into negative. There's a certain margin level percentage that the system will close off the trades. And if it gaps past and you end up with some type of negative balance, there's negative balance protection as long as you weren't playing any games, breaking rules or anything with fraudulent trading practices or something. You're protected against any slippage that might get you into some small negative balance. Okay, good question. So let's take a look. What's happening with the fundamentals? We've got markets dropping. The futures were in red all day. The volatility index was up all day, although that's recovered. It's barely up now, even 0.5%. The VIX index is referred to as the fear index. Usually when that's green, the markets are red. Okay, inverse relationship. Fear goes up. That's what the VIX index measures, volatility or fear. And when that's green, usually the futures are red. And then when the markets open, they open red. And that's exactly what happened. It was easy to read all day what the sentiment was. But the volatility was up like 6%, 7% earlier. And now it's almost flat. So it's recovered. A lot of the fear has disappeared today. Things are pretty balanced right now, which is what I was alluding to when we started the webinar, that for technical traders, there's been nice movements up and down, bouncing off support, reversing off resistance, some breakthrough moves. So it's been very nice for technical strategies, some of which we'll go over in a moment. There's coronavirus fears. That's what's happening. The spike in cases that's occurring in the U.S. and some European nations, etc. It's got the jitters on the markets, even though all this excitement about the new vaccines came out and drove the markets to new highs. All of a sudden, the realization is, but the increase in cases is occurring before it's ready to distribute. So, what good is a vaccine if the peak flu and cold season is upon us and the vaccine isn't distributed yet? So I know there are states in the U.S. that are getting new lockdowns in different cities and areas and across the European Union and other areas in the world. So the markets are fearful again that, hey, this is going to hurt the economy, even if there is a vaccine coming soon. The short-term effect looks like it could be negative from these spike in cases around the world. So that pulled, obviously, crude oil prices down too. It's all connected, right? It's a global economy. We could have known early today when you saw the volatility index was up 5-6%. You could have put your technical entry points in to sell on oil, to sell on the major indices, and you could have made nice profits before the market started to recover today. Yeah, Grant, I think regulatory approval's close actually for a couple of these vaccines, but I think it's a long ways away before the masses of people can have it available to actually receive it. They've got millions of doses created, but we really need tens of millions, 20s of millions of doses to satisfy the requirement, right? And we see the cases spiking already coming into the winter time, and unfortunately that was expected to happen, and it seems to be happening. Okay, so what else is going on? We've got economic numbers that came in not so good out of the US and Canada. Housing starts not up as much as expected in Canada. Retail sales not up as much as expected in the US. Export price index not up as much as expected, etc. Really some disappointing numbers today. There were some decent ones that came in later in the day that helped the recovery. So this was when the markets were crashing. Volatility was through the roof. And then these better numbers came in out of the US and Great Britain. I had the Bank of England, Bailey speaking, and some of the FOMC committee folks talked about fiscal help out of the US. And then we saw some recovery in the markets. That's what these green numbers and announcements helped to create today. So easy to read what happened and why. And so this is another headline: despite vaccine progress, investors eye Fed support as coronavirus surges. So the US is talking about more fiscal stimulus, and that could help the markets in general and specifically US markets recover potentially. And so yeah, that's it in a nutshell for the fundamentals. Let's get on the charts. Let's see what's going on. So Tesla had some good news that came out that excited investors, and this is what we call a gap, right? There's the gap. Now, stocks with us, you'll see gaps a lot of times from one day to the next, not just over the weekend. And the reason is the stocks with us are only traded during the market hours of the country that they're from. So Tesla being a US stock, it opens and closes with US markets. They don't run 24 hours a day, 5 days a week, like many of the assets we have, like oil and gold and FX pairings that run 24 hours. And only then you typically see large gaps from Friday's close through the weekend to Sunday night's open, Monday morning's open, you would see a gap on those assets. But with stocks, you can see a gap pretty much daily, and that's what you see on the chart. Gap here. This was the next day. Day closed, day opened with a gap. Next day, day opened with a gap, etc. So here's a large gap, and the larger the gap, the bigger the news, right? The bigger the momentum. And so we saw this gap up. We saw it pull back down a bit and then recover up some more. So what I see here on Tesla is a support level right here. Okay, there's our support at the top of the gap. So the question is, okay, what do you do? Well, you have some different options. Someone's asking about politics a bit. Democrats and Republicans reach an agreement on fiscal stimulus. Yeah, listen, the Democrats and Republicans in the U.S. are not cooperating the greatest with each other, especially during this election year. So they were using it as a kind of a tool for political purposes. Now that the election seems to be running its course, and it looks like we have a clear winner with Biden eventually here. It looks like the protests with some of the election fraud that went on. And there was fraud, but I don't think enough to flip the election that they're going to find. So looks like Biden will be president. Everyone's going to agree to that eventually here. And then maybe they'll get a package done, a stimulus package, but it might not be till early next year. Some of the reports are saying. So that's something, you know, we talk about fundamental news that can come at any time that can cause big movements. That's one of those stories. Could be a headline anytime that, hey, looks like they're going to have a deal. And boom, you could see markets break resistance levels and go up again. Have those pending orders waiting on the major indices, especially US indices, just in case that happens. Okay, so let me move on with the gap strategy. Some of your questions, I apologize, I won't be able to keep up with all of them. Let me jump back on the chart here and continue with the gap strategy. Okay, so if we see support here, if you like the idea of Tesla's momentum, it climbed, and you say, let me zoom in on 5-minute candles and see what's happening. Looks like it's kind of moving sideways now. It's not a strong uptrend, not a strong downtrend. Maybe I say, you know what? Let's take a shot here to buy on Tesla, okay? Maybe that's what you decide you want to do. So maybe I do 5 shares. I buy on Tesla. And I say, okay, gap up means positive momentum for the asset. It pulled back down some. So now I'm in an advantageous position below the opening price. It did move back into the gap, but now it seems to be trying to push up. So the support level here, I could say, is my stop loss spot. Okay, if it breaks below that line, if it hits here, then it very well could try to fill the entire gap. But since it found some support here and went back into an uptrend, maybe I say my stop loss will be at 430.32. So let me go back, add a stop loss, 430.32. Oops. In the MT4, you can't type your decimal. You just have to move it like I just did, and then type the numbers after the decimal. So 433.2, take profit at the high of the day. Why couldn't it reach the high it already reached today? 459.50. 459.5 would be just below the high of the day. I did it again with the decimal. Other side. There we are. Okay, so now I'm in. I've got my stop loss down here, just below that line I drew here. Let me move this. Okay, and so here's my stop loss. Let me just slide it up. And that's a nice part of the MT4. You can slide these stop loss and take profit marks just with a click and drag on the chart. So I've got my stop loss below the little support level that was formed here. If it breaks it, I'm out. Why am I buying? Because it gapped up today, and now I've got an advantageous spot where it pulled back a bit and already established an uptrend again. And look, I'm already in profit. So those of you scalping, meaning getting into a trade and out quick, these types of movements, they have momentum. I could already take $4. And you'd say, well, what's $4? Well, you know, If I have 1,000 in my account, $4, $5, that's 0.5% gain on the account. If I make 0.5% a day, that's 10% gain a month. That would double my investment in a year, more than double it. So small moves, small scalping moves where you open and close with small profits, riding the momentum in the direction you expect it, taking it and moving on, that can work out well. Small profits can add up. But right now I'm going to let this run. We'll see if it'll reach the high of the day before it reaches the low of the day. The momentum's on our side, right? Tesla had reason to gap that big. Why should it go all the way back down? That's the view many times with that strategy. So this is an idea of trading around a gap, going in the direction of the gap because the direction of the gap went that direction for a reason. Getting an advantageous entry point where it would have to go back in and start filling the gap towards Friday or yesterday's close before you would give up on your move. Okay. Let's take a look at oil real quick, since we wanted to look at some gapping strategies. Crude oil. And you'd say, well, where's the gap there? Well, let's go to 1-day candles. We'll find the gap. And we look back and we say, here's the gap from back when oil crashed down to zero on some of the futures contracts. So if we go to 1-week candles, or let me go 1 day and then zoom out, and now I see the gap, okay? To zoom in and out, you do the plus and minus up here for those of you that are new to this. And you see, here's the gap. Here's the top of the gap. Here's the bottom. You see, once it entered this gap right here, as the movement came back up, look how it filled the gap, hit the top of the gap, and dropped. Hit the bottom of the gap, went back up. Hit the top of the gap, and dropped. You see how that works? It's a strategy trading. Once it enters a gap, there's no resistance. There's nothing on the chart. So there's no resistance until it reaches the top of the gap. That's the first resistance point. And there it went like clockwork and dropped. So let's ignore all that history now. We get closer to where we are now. Here's the gap. Top of the gap down. Bottom of the gap up. Top of the gap down. Bottom of the gap up. Now we're at the top of the gap. And the question is, what's going to happen next? We're at the top of the gap. Will it break through this resistance point and go back up, or will it fill the gap and go back down? Okay. If we knew for sure, right, we could all become millionaires trading on this one move or several moves with oil. So we have to understand that, okay, let's go with what we know is that it has been moving nicely around the top of this gap, either breaking above it and going up or breaking below it and going down. So if we zoom in now, you see this red line, right? That's our top of the gap. Okay, you see here's the top of the gap. So when I go in on 15-minute candles, when you see this line, that's the top of the gap. Okay, so let's zoom in, 15-minute candles. This red line is the top of the gap. It's just above it. It's teetering below the gap, above the gap, below the gap, above the gap, below the gap. So the question is, which way will it go? Is it going to stay above the gap and go flying up? Or is it going to go below the gap and fill it and drop? And really, there's two opposing forces right now. There's the vaccine saying, hey, we're going to come out of this pandemic and there'll be increased economic activity, which would increase demand on oil, and that drives the price of oil up. Then there's the other side that says there's a huge pandemic that's getting worse right now. The vaccine's not quite ready to distribute. And so major economies are shutting down their economies right now. So maybe oil has reason to start filling the gap. Okay. The idea is you don't have to guess, right? Use the technical analysis. Say, okay, if it breaks this low point, then that establishes that there's momentum for oil to keep dropping. If it breaks this high point, then it establishes that there's momentum for oil to keep going up, right? What if breaking news comes out and they say, big deal reached between Republicans and Democrats in the US, and there's going to be a major stimulus, and that headline comes out right now. What do you think would happen to the price of oil? What do you think would happen to the price of oil if a headline came out that the U.S. agreed to a major stimulus package? Yeah, oil would go up and break this resistance level. So why not have a buy stop pending order right up here? If it breaks the resistance, then maybe it's up and running above the top of the gap, right? And you could have your take profit as a scalp somewhere up here or higher if you're a more patient trader, okay? And if the opposite, what if this bad news gets worse and major cities around the world start shutting down and quarantining again? What might happen to the price of oil? It certainly could plunge, and already OPEC plus, the OPEC plus nations are already saying, well, I don't know if we're going to agree to cut production. So that also is weighing, because OPEC was meeting today and they did not agree that, hey, yeah, for sure we're going to hold off on increases in production, or that they'll cut production more, and that's hurting the price of oil. So OPEC could agree 5 minutes from now that they are going to cut production. Boom, oil price goes up. Have your buy stop ready above the resistance. OPEC could say, no, we're going to increase production no matter what. Boom, oil price drops. So it could be talk about vaccines. It could be talk about oil production with OPEC. It could be a number of breaking headlines that could cause oil to break above this top of the gap or below the top of the gap. The fact is, when we look at one-day candles, it hasn't decided yet. It's teetering on this price. Will it fill the gap like it did here and here and here and here and here? Or will it break above the gap finally like it did here before running out of steam? Okay. Eventually, it's going to break this gap and fill all the way to the top of the next resistance level up here around 48. I don't think it's quite ready to reach 48 until we get really good news, like the vaccines being passed out and quarantines are ending. That'll shoot oil up to this next resistance level, potentially in a hurry. Okay, that's the next major resistance level up here on the one-day candles. So eventually you'll catch it. You put your buy stop up here, eventually you'll catch a run that goes all the way up. You could be wrong once, twice, 3 times, 4 times. You catch the one that runs and you're in overall profit. It's called patience. You have to have patience. You have to be willing to say strike 1, strike 2, lose a little bit, and then you get the winner. Jake, good question. When we're on one-day candles, you see this big candle here? There's nothing that stopped it on the one-day candles. Once this plunge started, it came straight down and didn't pause until here. Okay? So look, as we're on one-day candles, once it breaks above the bottom of this gap right here, there's nothing here for resistance. There's nothing up here. There's nothing. There's no price level here to say, oh, when it hits that price, it drops. There's nothing here except way back here. When it hit this price, it dropped. This was the next resistance where it hit and dropped. And so you follow that over, and that's the next major resistance level. Very good question. Okay, so let's then go in and zoom in and say, okay, if I'm putting a buy stop up here, if it breaks above here, maybe you're saying, you know what? I'm in this for the long term. I'll put my buy stop up here. It has to break the high point up here before I say it's true momentum. Okay? That's up to each individual trader, but your buy stop could be here with the idea of temporary momentum, taking a profit at the first resistance level, a scalp type move, buy stop, getting in here, getting out here, and a sell stop if it breaks this support down here, getting in here and getting out at the next support level down here, which is the bottom of this gap. You see that gap? Okay, that's the next support level down here where it hit and went up, hit and went up. Okay, so here's the next price level. So let's just carry this out. Okay, if I want to do this strategy where I'm surrounding this movement, buy stop, buys from a higher point. If it hits 41.62, I'm in. Okay, and my stop loss then, if it breaks through and triggers my buy up here, my stop loss is back below that resistance level, 41.5 maybe, 41.45. This is more of an art than a science. There's no exact right price for your stop loss. You want it far enough away that once it breaks through and gets going, that you don't hit your stop loss too quick if it just does a fake reversal before it keeps going. You want it far enough away to prevent false moves from stopping you out. And then I would take profit before the day's high up here, before this high point, maybe 42.25. If I'm scalping, if I'm doing a short move, which is what I'm showing an example of now. And there we are. Okay, there's my pending order. If it breaks above this little resistance here, it triggers my trade at this price here. I get out with a profit here. I'm risking about 1/4. Okay, breaks through, triggers. As long as it doesn't break back below that, what should be support. If it breaks above the resistance, it becomes support. If it doesn't break back down, then I'm in until it hits the next resistance level here. And that's about 4 times potential profit compared to risk. I only need to be right 33% of the time, and I'm profiting. Not so hard to do. And then I could do a sell stop down here. Same thing. Crude oil, switch to pending order, sell stop, entry price 40 point, let's say 7 as an example. There's no guarantee we'll win any of these, but trading's not about guarantees. It's about potential. It's about having a strategy that in the end, you can make more than you lose is the idea. That's what we're hoping for. Take profit down here before the support level, 40.2, let's say. There's the pending sell stop. If it breaks the support, it triggers a sell here, expecting a slide down towards the next support level, taking profit just before it reaches that support. And again, my potential risk is a lot less than my potential profit. And maybe let me slide this line a little bit. Slide that down and stop loss. I didn't get my stop loss in, did I, on the sell stop? I want to put my stop loss up here about 40.95 back above the broken support. $40.9. Okay, so there's the stop loss. Why would I put my stop loss here on the sell? Because if it broke this support level here and triggered my sell, if it's a true breakthrough, it shouldn't go back above that broken support because that should be resistance now. And down it could go to the next support level. Okay. Good question, Grant. What causes the gaps? Usually it's a weekend, right? It's the weekend. And so you see this is the 13th, and then the market opened on the 15th. So this was a Friday. This is Sunday night, Monday morning. Why is there a gap? Because the price changes. People are buying and selling oil outside of the retail market that we all are trading on. People are buying and selling oil through the weekend. So the price changes. And when the market opens, there's a gap. The price changed over the weekend. And the bigger the news over the weekend, the bigger the gap. Okay. And so you want to be careful carrying trades through the weekend. It could gap against you. And if you were selling here, right? Selling and your stop loss was at this price, when the market opened way up here, you'd have lost more than where your stop loss was. It could have gapped past your stop loss. So you want to be careful carrying trades through the weekend, unless it's a longer term move where your stop loss is really far away, right? Then you're not so worried about a small gap. So, but like we saw in Tesla, the gaps were there every day almost, and that's because the market opens and closes on the stocks every day. So there's a gap between the time for Tesla, the U.S. market closes at 5 p.m. New York time, and the U.S. market opens the next day. So there's a gap in the price each day, many times with the individual stocks. Okay, very good questions. Someone was asking for natural gas, so let's do that. Georgios, you mostly will only see a gap on something like gold through the weekend, okay? And we'll take a look at that in a moment. So let's bring up natural gas. That was requested. And we see natural gas down here. We're looking at 15-minute candles. We see there was a gap through the weekend on natural gas, right? And here it goes. Why is the gap only through the weekend? Because it's traded 24 hours a day, okay? It's traded 24 hours a day. The market only closes on Friday evening and then reopens Sunday night / Monday morning. So there's the gap. Look how easy this strategy was. The market gapped down from last week to this week. What does that tell you? What does that tell you about sentiment? If the market gapped down when it opened that much, which way should you trade with sentiment? Down then, right? Where would your stop loss be? Here. If it re-enters the gap, you get out. So as soon as it gapped down and it started going this way, sideways, you could have sold, put your stop loss just into the gap. If it re-enters the gap, you get out, and down it went with the sentiment. As soon as it consolidated and went sideways, take your profit. Okay? Very simple strategy. The gap tells you the direction of momentum. There's a reason why it gapped that way. As long as it doesn't re-enter the gap, then you can try to go with the momentum. If it re-enters the gap, okay, the momentum changed, get out. You could even enter in the opposite direction then. Have a buy stop up here in this example. You're trading down. If it did break up and re-enter the gap, it hits the stop loss on the sell, you're out. Now you're in on a buy with your take profit at the top of the gap, because that's the first resistance level. All right, many times if it re-enters the gap, it will fill the gap, at least a significant part of it. And many times, once it gaps, if you trade in the direction that it gapped, as long as it doesn't re-enter, it's going the right direction. Okay, so nice strategies to trade if it re-enters the gap in the direction back up in this example. And as long as it doesn't re-enter, you're trading in the direction of the gap. And you see how well that would have worked out over the last day and a half. Okay. Okay, so what do you do now with natural gas is the question. Well, we need bigger picture. I can't tell with 15-minute candles. Why did this stop right here? I'd be willing to bet when we look at 4-hour candles or one-day candles, there's a support level right here. It was probably predictable that when it hit this price level, it would stop dropping, at least temporarily. So let's look. 1-hour candles, is there a support level? None. I don't see one over here. 4-hour candles. There it is. Okay, let's draw the line. Here's an old resistance level here. Resistance, down. Resistance, down. Here's this wick hit, down. And then once it got above here, it was support. It hit that price and went back up. So here it is, right at the same spot. Look at this movement, testing this price and not dropping. It's the same as what happened right here. Testing the price and not dropping. So this plunge, if you were in on the sell, it was predictable where you might take your profit. As it was dropping, you go to these 4-hour candles and you look off and you say, oh, here's a support level right here where it had trouble dropping and bounced back up. So as this movement reached that price level, here was your spot to take profit. Right on cue, you'd have taken it right near this support level here. Okay, and so and by the way, if I add Fibonacci levels, okay, here's a Fibonacci drawing tool. I click on it, I bring it over to the chart. I'll include all of this data, all of these candles. So all I have to do is go to where I want it to start, left click and drag. I'm left clicking and dragging. And let's say I want to go down to this gap down here, okay? This price level down here. So I can say, okay, here's the support level I want at the bottom. I want to include all of this data. And there we are. I let go and there it is. So here's my lower support level. I pick that. Here's my upper resistance level. I pick that. Maybe I slide it down just a little. Let me double click on the red line. Now I can adjust it. Okay. So here's my resistance at the top. Here's my support at the bottom. Now, based on ratios, it created the Fibonacci levels in between. Fibonacci levels are based on how things happen randomly in different ratios in nature, whether it's with stars or the formation of crystals. There's a recognized pattern that naturally seems to repeat itself in certain ratios in the world in general, not just in investing. So that's what this is based off of. You may or may not believe that that has anything to do with investing, but as long as millions of other people trade off of those levels, then you're going to find nice price action as it approaches those levels. So you don't have to believe in the philosophy to use the tool. Because other people are using the tool, it's like a self-fulfilling prophecy. If millions of people buy when it hits the next price level, that drives the price up. So it goes up because people buy. And so by buying from that price level, you can be in on that wave, so to speak. So look, I drew the lower Fibonacci level based on a support level way down here, and the upper one based on a resistance level up here. Look how well this ratio level, the 23.6 Fibonacci level, which is a standard spot that you draw a Fibonacci line. Look exactly where that went up. Look how perfect. If you'd have taken your profit on this plunge, if you'd have taken your profit as it reached this Fibonacci level, that was like the perfect spot to get out, right above that level. And it happens to correspond with the support level that we drew. This level right here where it was having trouble dropping. Look at that. Okay. And so the level I drew was here. And actually the Fibonacci level was more perfect here. It almost reached that Fibonacci level, but right in the middle of those two was the sweet spot. And that's how you can use your own price levels combined with something like Fibonacci levels to compromise. You could say, okay, I thought the support was a little higher, and it did. It hesitated there. Fibonacci thought it was a little lower. Well, it didn't quite reach. But if I took the average of my line and the Fibonacci level and went right down the middle, that was about the perfect spot to take profit. So it's combining what you view on the chart with what the indicator shows you. And now you have a working strategy, right? It's more powerful because you have more people following those price levels by using a tool like Fibonacci levels. Sandu, a lot of times when gaps start to fill, they can fill pretty rapidly. But it depends. If we're looking at a gap like on oil, those were one-day candles. That could take weeks or days anyways to fill. If we're looking at a gap on 15-minute candles or 4-hour candles, then that's different. It could maybe fill quicker. So it's a good question, and it depends what size candles you're looking at, what time periods. So this is a nice tool. Fibonacci can be very useful for finding entry points, exit points, for finding spots that you want to maybe put pending orders to enter and exit. All right, so this is what I see with natural gas. I see the potential that this is on a nice support level. It could be a spot that with natural gas, it is the winter time, actually. So maybe take a shot at a buy on natural gas. You say, okay, I don't have to risk much. This is a major support level. Maybe I'll put my stop loss just below the support level at 2.63, let's say, or 2.635. 2.635. My take profit, maybe I want to go to the next resistance level up here. This was support, it broke through, and that's resistance. So maybe I'm going up around 2.73, or do I want to go after something bigger, be more patient, which would be up here. There's a resistance level up here that it plunged from. So if it comes back up to this level, that might be a spot that I'll be more patient and wait on. So 2.85 maybe for a take profit. So I might be wrong on the first shot here, and then I can go after it again if I am, because my payout's going to be a lot more than what I'm risking. 2.85. Okay. So now my risk is about a third of my potential profit. And I only need it to go up to the first major resistance level, doesn't have to break it, and I still could make 3 times what I'm risking approximately, or more than double than what I'm risking. Okay. Yeah, you can check the weather, Mubarak, but I'm pretty certain it's winter time or close to it in many areas of the world. So depending on what side of the equator you're on, the weather's going one way or the other anyways. But it looks like this is a nice support level anyways, and this is a technical trading session. Does help to check the weather. But since we're trading technically here, we've got a great support level backed up by Fibonacci levels on the 4-hour candles and our own drawn support level. So technically speaking, it's a nice entry point. Stop loss below a major support level and hoping it rises towards the first resistance level. Almost a purely technical move there. Not based on much fundamentals, really, as much as technicals. Okay. Well, listen, we've been going for about an hour, over 50 minutes anyway, so I think it's a good spot to stop. Mubarak, I would say check the weather, see if you want to get in on this move. Maybe that'll be helpful to make up your mind. But you can use these strategies on a lot of assets. Take a look at, we didn't even look at the major indices. They're really moving a lot today. Dow Jones, NASDAQ, the DAX, the CAC. Take a look at them. You could find some nice price levels, just like we looked at on these assets, to buy or sell from. I think you can find some really nice entry points on the major indices right now. Tesla, you're right. We didn't look at Tesla, or did we? Yeah, we looked at Tesla. We took a move on Tesla. Threw myself off for a second there. Amir, if you're afraid of the rollover with natural gas, close before the weekend. If we've got a rollover on natural gas this weekend, and I'm not certain it is, but if you say so, I'll trust you. You can get rolled over if you want. What that means is whatever the difference in the new futures contract price is, if you lose because of the new futures contract price, we do an adjustment where we add money to your account to make up for the difference. Or if the new contract price causes you to gain, we do a negative adjustment off your balance. So really it's a zero-sum game with the rollover. There's an adjustment either way. So that the false or fake market move, that's really just a movement because of the new contract price, any gain or loss is adjusted. But if you're concerned with it, just close on Friday, reopen on Monday. Oh, Corey, what's your question? There's been so many questions, it's moved off my screen. So repose your question, Corey, and then we'll end the session here. Or I can try and scroll up. I'm looking for your question. I don't see it. It must be quite a ways back. All right. No, I don't mean Conroy. Corey. How do you do a partial close? Oh, good question. Okay, that was the question that Corey wanted. So let's pretend Tesla is in a nice profit right now and we wanted to close it. I normally wouldn't close this at all. It hasn't even gotten close to our stop loss, and I believe it's got a good chance. But let's say it's up in profit, and I say, okay, I want to close, 2 shares. I've got 5 shares. Maybe I want to close 2 of it and bank some of my profit that we're pretending it's in. So I go to modify or delete. I change it to from modify to market execution. Okay. Then you see I have the option to close. It has my order number and it says how much I'm closing, 0.05. Well, I want to keep some of it open in this scenario. I only want to close part of it and take part of my profit. So I say, okay, let me close instead of the whole 0.05, let me close 0.02. So now you look and it says close, there's the order number, 0.02. So it'll close the amount that you tell it to close, and then it'll leave the rest open. So there, I closed 0.02. Now I only have 0.03 open on Tesla, you see? And it banked whatever percent of the P&L that was, it banked it just now. Okay. All right, great, everybody. Thank you for attending. Thank you for the good questions. I apologize I couldn't get to all of them, but I promise we'll try and get to as many as possible in the next webinar as well. So please come back Thursday. I'd be happy to have everybody back. All right, everybody, good luck with the trading through the rest of the day. I think you'll have some great trending movements, just like we've seen here, okay? All right, bye, everybody.